Welcome back to Imperial Wealth's Crypto Chronicle podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week.
The team today, just the two of us.
Mate, coming in live.
It's coming in live. Unfortunately, without William, who gave us that lovely introduction, but it'll just be Mitchell, myself, and Taylor today, giving you another edition of the Crypto Chronicle podcast. And much has been happening, hasn't it, Taylor?
Mate, it's an all-star crew today. We're going to make sure that everyone gets exactly what they need.
Yes. So we've got much to get through, both fundamentally, and there's a fair bit also happening, obviously, technically on the charts. A lot of pumping, some dumping. Obviously, in the mining sphere, everything's heating up too, a lot.
Mate, it's everything's blowing up at the moment. BTC goes up, everyone has a good day.
Yep, exactly right. So it's a good Tuesday so far. So let's get into it. Now, we'll start off the podcast going a bit back over FTX now. Hopefully we don't open anyone's wounds here, but much has been coming out in the last week or so with SBF, Caroline Ellison and Gary Wang. Pretty much the three people that orchestrated the whole collapse of the dominoes of FTX. But it's been interesting to see the trial play out, and also, some funny things coming through, but we'll quickly go over it. So obviously the criminal trial of Sam SBF Bankman-Fried has been occurring. They lost the FTX user funds. I think it was around 14 billion or so.
Every time I hear that number, it just makes me go, oh no.
Yes, he lost 14 billion of our fantasy internet money, that man. So, and essentially what's happened in the last week is Gary and Sam have been testifying. I think they've pleaded guilty. He's pleaded not guilty. They're saying Sam did it all. Sam sits there tweaking and probably needing some more Adderall to get an answer out.
Mate, any legal counsel would be telling you to go straight for him, wouldn't you? Like, it's just a common playbook, so it makes perfect sense.
Yeah. So essentially what's happening is his defense is seeking to shift the blame onto Ellison and obviously Gary and others, and Gary and Caroline are testifying that, it was Sam's demands, and there's things coming out such as $150 million payment that they allegedly made to a Chinese official. They tried to, I think in the last hours of collapsing, tried to bribe a Saudi crown prince, Mohammed bin Salman, amongst other measures, which is including, I think Caroline noted in her trial that they contacted regulators to try and crack down on Binance. Yeah, which is interesting. We all know the beef between Binance.
Oh, well, when there's smoke, you may not push the fire somewhere else, so it makes total sense.
Oh, yeah, for sure. And I think that's maybe potentially why CZ pushed the smoke and fire back onto Sam, and ultimately probably was the reason. Well, not the reason. It was all FTX and Sam, but ultimately the downfall was when CZ started selling his FTT tokens, unloading them, and then Caroline's come out with the we'll buy them off you for 22 OTC, and we all know FTT's at about $1 now, whatever it is. But that's a general rundown of that. We will quickly finish it off by saying I did do an article that will be included in the Chronicle about the speculation over whether they kept BTC suppressed below 20,000 and they didn't allow it to go to 100,000 in the bull run. Now, there's a lot of speculation here. What do you think? I think it was, the way I read it was, in the quotes that he was saying, if whenever BTC is over $20,000, sell it. I interpreted that more as it's like overvalued now. We need liquidity fast. You're not going to get much better than that. So sell it there because then we have cash. Whereas a lot of other people just thought it was him being evil and wanting to kill BTC. But
yeah, I think he's just hungry for money.
Yeah, hungry for money, I think, as well. But there's an interesting article there looking at both sides anyway. Quickly on Binance, a good news out of Binance is they did halt Hamas-linked accounts. We were talking about the Israeli-Palestinian conflict last week and how this can impact the wider market and different things. But good to see CZ stopping some terrorists.
Yeah, I think, everyone's obviously got to do something for someone.
Yeah.
It'll be interesting whether or not they cut both parties off in the end. It's whichever side you stand on, there's always going to be something.
Yeah, it's a good point. But moving on to the hot news that is circulating currently, there's actually three different things we want to talk about here. But the first being what kicked off last Friday night, I believe, for us Australians, and that was Grayscale winning, it was the SEC deciding not to appeal the Grayscale case. So essentially this came after developments in August in which declared that the SEC's denial of Grayscale's request to convert its Bitcoin trust to an ETF lacked validity. But essentially what happened was, they counter-sued, or they took them to court. Essentially, the judges said you don't have a leg to stand on SEC in stating your reasons for them not allowing to convert it to an ETF. So really, most people saw this, didn't they, as kind of the green light that these will get approved.
Yeah, well, it's the final roadblock.
Yeah.
You know what I mean? That was, eventually this would be what the whole roadblock was for ETFs not getting approved automatically. So the last block's out of the way. It's only a matter of time now, whether or not real news or fake, it's going to be, soon.
Yeah, well, exactly. And we'll move on to that next point, which was obviously overnight. Most people should know by now. I did post an article in the Discord and on our website just a few hours ago, but to those that didn't know, there was a lot of misinformation overnight about the BlackRock or iShares ETF being approved, which caused a huge surge in a matter of minutes in Bitcoin's price and caused a few ripples in the cryptocurrency market. And essentially it stemmed from a fake post from Cointelegraph on Twitter, which led to being the largest news source in the cryptocurrency and blockchain industry. You'd think that their sources were good, so everyone did take it on merit. But essentially, we saw Bitcoin go from, I think, 27.9k to 30k on some exchanges, 30.5 on perp exchanges within a matter of minutes before.
I fell asleep 25 minutes prior to this.
Yeah.
And literally, I remember rolling over at maybe midnight and going, what the hell is my phone doing? And I was like, I'll check it in the morning.
Yeah.
And it was all these notifications from everyone being like, ETF been approved, ETF been approved.
Yeah, it was, I was much the same. I hadn't actually stayed awake recently for a lot of New York Opens, but I decided to last night purely from a trading perspective. And, I was lying in bed. At, I think it was about 12, and I was on my phone till 12:20. I thought I'll just stay up another 10 minutes at the New York Open, see what price gives. And I think it was 12:25. I was looking at the chart and it started shredding from all the way upwards, and I was going, this is the greatest short squeeze I've ever seen live with my own eyes. And then obviously went to Twitter, saw what was happening. I took it on face value. I thought, whoa, this is crazy. It's been approved. Cointelegraph's posting it. All other verified routers are now posting it because they would assume that Cointelegraph sources are legit. But no, it was fake news. It's still under review for BlackRock and for iShares. But obviously, like we said, the best thing to take out of this is the reaction of the market, isn't it?
Mate, the FOMO is there.
Oh, the FOMO's there.
Probably. How long did it take for the news to split? Like, it only took half an hour or 45 minutes, yeah?
Yeah. Well, yeah. Less, I think. Yeah.
So, obviously it went up 2 and a bit K or whatever in, a heartbeat.
Yeah.
It's going to be pretty interesting to see where that goes, once we actually get a decent 4-hour go of it. Yeah,
well, I think I did make that point before. I'd love to see the daily candle after the real news, but I think what it shows in particular is the first thing is it's not priced in, because if it was priced in, price wouldn't have moved when it was approved.
Yeah, and that quickly either.
Price jumped 10% in 2 minutes. Second thing is most people are still sidelined, and there is that element of FOMO, like you said, because the thing I take from this is look how quickly retail or sideline traders were quick to smash the green button as soon as the news was there, real or fake.
Yep.
And then so imagine that for a day or a week or a month following. Could be pretty interesting, but they're all pretty good signs for those BTC maxis and those that are hoping this ETF gets approved, because the signs are there. So
mate, it's going to lead for a very interesting November, December, January.
Yeah, it is. And, as famous people say, it's if not, when. So it's pretty much that case now, given what we spoke about Grayscale. And I think I saw, his name's Larry Fink, I think it is, the CEO of BlackRock today, going on all the news channels again, talking about how it's going to improve quality of life, Bitcoin and financial services, and how many clients are asking them. Yeah, well, funny enough, I did post this at the time when iShares and BlackRock did apply for the ETF. It's 2 CNN news articles 3 years apart of Larry Fink talking about Bitcoin. 3 years ago, it's only used for fraud, thefts and criminals. Now it's the greatest asset on earth. So it's funny how the orange pill can change a man's mind, particularly someone as big as Larry Fink, which some people think pretty much runs the world. But hey, if the man that runs the world is a Bitcoin maxi, I'm happy.
I'm all for that. Yeah. No issue on my end.
Moving on to the last of the fundamental stuff, 3 articles here that'll be in the Chronicle around Australian regulation, which has been a hot topic recently. We spoke with Simon last week on that. But essentially the gist of this is that the Australian Treasury came out with a proposed regulatory framework yesterday, or maybe the day before. And obviously in the past that we've been talking about in many articles kind of across the last year and a half is the Treasury been attempting to token map or do tokenization and think about how we regulate tokens. And now they've actually realized this might not be the best approach, and they're changing it to focusing on exchanges and service providers of these tokens as opposed to focusing on the individual tokens themselves.
Heavily regulate the few rather than the many, basically.
Yeah, exactly. And it's, I think it's more so they've learnt their lessons from, I mean, the easiest case is the SEC. Where does it all their focus goes on? It goes on saying manages the security, XRPs the security, Grayscale does this, blah, blah, and they're not going, we should probably look at FTX and what they do with these tokens and how that can impact on retail traders and investors.
Well, instead of trying to it's the same as regulating the fuel industry. It's like, well, no, you just regulate, the fuel providers or the sellers. Same thing goes with crypto. It's going to lead to, not as many hands across everything. Yeah.
So I think this is the better approach. It makes a lot more sense from a investor and consumer point of view, because that's who ultimately the Treasury or the SEC are supposed to protect. And so essentially what this means is, like you said, the Australian exchanges will have to probably obtain financial services license from local regulators as opposed to all this other dodgy stuff. And it essentially just aims to address consumer protection whilst obviously still trying to foster innovation without being so harsh on the tokens and the projects and whatnot. So they're obviously seeking feedback. So far, I think the overwhelming response from the Australian crypto exchanges has been good.
It makes it clear. Simon said that last week. Is the biggest issue they have is that nothing is ever clear and concise. It's always maybe this, maybe that. Like it's the information that's coming out which is confusing them.
So I think I think most exchanges thought this is good. It's a step in the right direction. We need it. Ultimately, eventually, they appreciate the thoughtful approach. Whilst I think some others were kind of thinking that the feel of it is attempting to fit crypto within traditional finance and trying to regulate it like that when it shouldn't be. But it'll be interesting. They're seeking feedback and the submissions are due by December 1st. So
I think it'll also help for them. Like at the end of the day, exchanges are also a account for the people. So it helps the exchanges know where their liability ends as well. So it should provide a lot of clarity and a lot of, ideology of what is needed from them so that they're obviously helping people, thus also helping, the way it works going forward.
Yeah.
It's definitely going to push forward more, KYC and centralization. But, at the end of the day, that's kind of the only way that crypto will expand, I think.
Yeah, for sure.
To a degree.
Well, I did actually text Simon from Cointelegraph this morning. I said, Simon. And I asked him, what are your thoughts on it? And he said, good morning. Conceptually, it was very sound. So, but he's waiting for further details. So
I was going to say, man, a few words.
He's short and sharp, Simon. He's efficient. And then the last thing on Australian regulations is actually to do with the RBA. And they're obviously, as we've spoken of in the past, they're exploring the possibility of introducing a CBDC. For those that don't know, that's a central bank digital currency to essentially modernize the monetary system, get rid of cash, etc., make everything digitalized. So essentially, Governor Brad Jones discussed the potential benefits of digitizing assets, emphasizing, how it can improve efficiency, transparency, resilience. So it's interesting because, there's a lot of people for CBDCs. There's a lot of people not for them. It's a hot topic.
But it's going to happen.
Yeah, I feel like it's one of those things, isn't it? It's like you can sit here and moan and complain, which I kind of do, because, with blockchain technology and the technology we want to do, you want transparency whilst minimizing, what's the word I'm looking for? Minimizing, doxing yourself, etc., like that. With privacy, maximizing privacy. Whereas with a CBDC, it's using all of our technology, but essentially saying, but we get to overreach and overlook at everything you do with your electronic cash, which is a kind of, a pro benefit of cash in fiat is that you can spend it and it's not tracked, it's not doing anything. So Yeah, the proponents are there for and against.
But who uses cash anymore?
Yeah, no one.
Do you know what I mean? That's what I mean. That the whole ideology of cash and that anonymity is kind of, only reserved to the people who are really, 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 really needing that, which is, as much as that's okay, it's not really our business.
Yeah, for sure. Essentially that's the gist of it. They're researching the retail CBDC, and I do believe in the article it talks about their plans to collaborate with international partners. So I think different banks and stuff kind of see how...
The only reason it hasn't been approved yet is pretty much because the idea is better than the current one, isn't it?
What's that? Sorry?
The only reason that they haven't gone ahead with something is because they have to look like they're really, really struggling to make this decision.
Yeah.
Because otherwise it makes them look like idiots.
Yeah. Additionally, I think, knowing Australia, they'll wait till the US does it and blah, blah.
We're never the first to do anything.
No. As we've spoken about in prior podcasts, we're almost last in tech and innovation for developed countries. So
I know, we get the iPhone 15 later than anyone else.
Quickly, just one last thing to finish us up on the fundamental. I always like to include a little cheeky institutional adoption of crypto.
This is the best one yet.
Yeah, so in the last week, Ferrari have decided to, for all their crypto kings, adopt cryptocurrency payments. I think just in time for the bull run, so Taylor can...
Are they taking XRP?
I hope they take CAS. So they've essentially decided to introduce cryptocurrency payments for their luxury sports cars. Given the strong demand and actually a lot of dealer requests they've been getting from people, maybe people cashed out in the last bull run, they want a cheeky Ferrari. Maybe we should ask Cal if he's going to get one in the next couple of days.
Those, Shiba, Baby Anu people.
Yeah, those people.
Anu Volt and all that sort of stuff that have been selling off,
Yeah, so, essentially it just really aims to extend their customer base by connecting potential buyers who, might not be traditional Ferrari clients, which they probably usually are, but, with people with the crypto that want to put it into an asset like a Ferrari. So they plan to do this in Europe in early 2024 and then expand to other crypto-friendly regions.
Look out. That's going to be amazing. I can't wait to buy my next car in crypto.
It'll be great.
Yeah.
And they're essentially utilizing BitPay to ensure the legitimacy of the digital currency, obviously to prevent any involvement in illicit activities or financial.
How are they going to determine that exactly?
I don't know.
Yeah.
I think BitPay is pretty... they'll confirm, the crypto's on the blockchain, where it's come from.
But you wouldn't be able to confirm that it's not done any.
Maybe they have to KYC with BitPay before they do it. So then, do you know what I mean? So it's not like some random criminal using BitPay and then paying Ferrari and going, I want a Ferrari. It's like, this person is KYC with us, he does this, these are his assets, this is his crypto, he's paying you now. But I'll look more into that, I'm not fully sure.
But at the end of the day, doesn't that mean you just go down the road and find Joe Blow and go, mate, I'll give you 10K?
Yeah, you could.
If you sign up to this account, buy a Ferrari and then sell it to me.
You could do that in any way, though.
Yeah, literally. Yeah.
But anyways, we'll move on from the fundamental. Big week of news, obviously. Big morning and overnight news. You can catch all of the articles as usual in the written Chronicle, which is on the website with short summaries and links to all the articles. But moving on to the technical analysis.
Run us through the charts. Come on.
Well, it's been an interesting week of the DXY, I'll say that. I think, I can't remember exactly where we were sitting last week. We might have been sitting at support on the DXY, around 105. And obviously, towards the back end of last week, we saw the DXY rocket back up off of support. And then the stock markets got crunched down a bit after, bouncing off of support. So it's kind of the inverse correlation is very clear there between at least the stock markets and the DXY. But essentially what we've done is, and you'll see the chart in the Chronicle, is we've back tested an uptrend line that was broken. And since I've really wanted to see us reject from there, and we have. So from the high of 107.3, I think just when I was writing this, we're 106.2. I really do want to see that 105 area again and see that support broken. So we can head down to 104 or so, but that'll obviously remain to be seen as there's a bit of uncertainty macro-wise, I think, with what they'll do with rates. Are they keeping them higher for longer still? Do we get rate cuts towards the end of the year? The yields are still remaining steady given this uncertainty. So it'll be an interesting watch, like you said, across October, November, December, Q4, essentially, for macro. I think you'll get a pretty clear picture of 2024, depending on this quarter. So I'm
excited.
Yeah, me too. Stock markets did fall down the week. As mentioned, they have bounced from support again. BTC, I'll include a chart in the update, but it made it really, I know after the fact narratives, you can say blah, 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 and the ETF fake news pumped it. But if you go back to the charts, you'll see just towards the end of last week, we cleanly back tested a downtrend line. We were holding 50-day SMA support. this is confluence with, RSI, OBV, MACD, doing solid movements, really push this market up. And it is an after the fact narrative comment, but I feel like we were going to make this move up slowly anyways. And this news kind of just pushed it a bit quicker, if that makes sense. As a result, our bullish market structure I always include continues to hold and ring true. That 25k line of defense is a masterful defense right now. Just for alts, ETH is back above 1600, but for most of you at home that are alt holders, you'll notice that they have lagged on this move, and that is because Bitcoin dominance was up as much as 3% across the last 48 hours, which is, I think on last week's podcast, I was talking about a daily candle, 1% on Bitcoin dominance being, quite large and how you don't see it often. And I think today's, when I wrote down my notes, it was up 1.82% on the daily candle. It
rocketed up to like 52.6.
Yeah,
which is crazy.
Yeah, so I think even, I was holding some alt trades, Sol, Gala, Cass, and, 26.8k, at least in the case of Cass and Gala, or even just around 27k, even at the 27.9k, by the time they were 30k, similar levels. But no one started pumping alts huge. Sol got a big pump. Some of the main alts did, but, people went trigger happy quickly buying Cass or, your Galas or thing like that. So if you're wondering why it didn't move up with the market, that's why, because BTC enjoyed majority of the spoils, which always happens on those impulse moves more often than not. And then you see this consolidation in an area like here, and this is where some alts might start to play catch up. So mining, talk us about a big hash rate, difficulty.
Yeah. It's been a very interesting week, I guess, since we spoke last. It's more or less, I guess, hash rate has gone up or continued that stable trajectory, but at the same point, transactional volume got slammed.
Yeah.
We usually do see this once we've had very similar market conditions for a while.
Yep.
Usually 2 to 3 weeks of stable price action really sort of limits how many people are using it. So the rewards in itself was pretty low. We sort of came back down to about 0.1 of a Bitcoin per block extra, which is pretty average. But then interesting, on last night, we saw difficulty rise by about 6.5%, which is, somewhat gut-wrenching. But at the same point, we've always said it's going to continue to go up quite heavily over the next 6 months until the halving. And that's mainly, consistent mining machines from 4 years ago remaining online and vice versa. So, we are sort of seeing that. However, last night with that big pump, we just saw some massive transactional volume, which is really positive. We were seeing, 0.4 to 0.5 of a BTC per block with transaction fees. So huge in that news, which is going to average out the next one. It looks like hash rates come back down a little bit, which it's sort of ebbing and flowing at the moment. So we'll sort of keep track on that. There's no real projection as to where we're going to sit for difficulty next fortnight, but we'll see how we go.
Yeah.
But that's obviously BTC. When you look at everything else, it's all relatively stable. Script with LTC and Doge is pretty similar at the moment. They're remaining really, really healthy post LTC halving.
Yeah.
Doge's difficulty continues to drop, which is sort of picking up for the profits lost from LTC, which is pretty positive.
Yeah.
Cass is very similar to what we've been seeing over the last few weeks. The hash rate is jumping at a relatively stable rate with every time there's a new release. So we finally touched that 50 petahash mark, which is sort of a little bit of a slight concern. We got there a little bit quicker than what we all thought. We thought it'd be sort of November, December, but it's come a bit early. We think there's been a lot more of the Bitmains coming online, which is pretty normal. And, they're still doing really well considering, Cass's price dropped by, what was about 20-25%.
Yep, I'd say so.
Which has come back up a little bit more now, which is still in that nice trend channel, which we like to see.
Yeah.
So they're still doing really good profits. We're talking 100, 150 bucks a day. So there's no major concern in that sense. It's just dropped a fair bit from where it was. The biggest one that's been pretty interesting for a few clients that are mining, Dash. Dash is doing really well, which quite a small network. So it's a pretty big positive in that sense. But they dropped about a third of their hash rate in the last 3 weeks, which is
and they're dropping difficulty too?
Yeah, well, difficulty dropped on par with that. So difficulty dropped by about 23%, which, is meaning they're making 10, 11 bucks, 12 bucks a day, which is really positive. Yeah. And it's really a positive sign because D9s are really hard to get your hands on.
Right.
So they're quite limited. There's not a huge amount of them being manufactured. So if, mining Dash is a good thing. We've got a few clients doing it at the moment. It's something I'm considering now with how well they're going. So it's pretty cool to sort of see a smaller network do well. But other than that, there's not a huge amount going on at the moment in that sense. It's more or less a lot of clients at the moment looking to set in for the next few months, buying machines now. You know, it's quite interesting. We were talking to clients last night and this morning, and you know, as soon as that fake news happened and BTC went up to 30K, Cal was saying, oh, geez, prices of machines going to go up 20, 30%, whatever it is. So it sort of shows, you know, how much getting involved now is kind of a good point, because as soon as we hit that next run, it's game over. Machines are going to go up pretty stiffly. And
I think that's the thing that, you know, I've mentioned this and I've tried to make a point of it in the past, is on average year to year, BTC, the main gains of BTC comes on 13 days of 365 days of the year. So people sit there and then watch the chart, and you know, you can slowly watch it grind up and down in these ranges. But last night's a perfect example. When it makes a move, it makes a 10-20% move in a daily candle, and then it'll sit and it'll range. Just think of this year as the example. You know, we go from 16, fly up above 20, range there for a bit, up to 25, range there for a bit, down to 19, and then it shoots straight up to 28. Like,
well, that's the thing. Well, Bitcoin had done 100% between January and April.
Yeah, exactly.
Do you know what I mean? So like it is a very quick mover, and I think a lot of people really do have that sideline fever of watching and waiting.
And it'll be the same with miners.
I will be changing my phone number because everyone that I've spoken to for the last few years, as soon as it's in Channel 7 is going, oh, breaking news, Bitcoin's at 20 grand or whatever it's going to be, I will be getting calls at every minute. Yeah. So it's just, you know what I mean, waiting. As much as it makes perfect sense from a retail perspective, I can understand people's hesitation. It's like they're going to be late to the party. Yeah. And they'll pay for it.
Well, it always happens, and that's how the tailwinds of BTC works. It's setting yourself up in the bear market, chilling. You might lose 20 to 30. You might even lose 50% on some of your investments, but before you can blink, they're up at where you got them, or 50% up. And it's the people that start chasing those higher entries that, you know, rocket fuel your investments up further. So I think we'll leave that there. Great discussion today, Taylor. Thank you. Mate, I do want to mention something that I did forget that I was supposed to say at the start. Taylor will, myself, Cal, maybe Joe, not sure.
Oh, yeah, we'll bring him along.
Yeah, we'll bring him along. Joe, our great dev. Shout out, Joe. But we do have 30 free tickets that we can bring a lot of our favourite clients on, or, you know, if you've got some of our services and you want to meet us, or any of our favourite listeners on the podcast. We do have spare tickets, and we're looking to bring a lot of you along. So if anyone's interested, just reach out to myself or Taylor, and we can organise you a ticket.
Yep, 10th, 12th November. Yeah, Melbourne Convention Centre.
10 to 12? Yeah.
Yeah, I think it is. Yeah.
So it's on a Friday as well.
No, sorry, 11th, 12th.
11th, yeah. Well, I didn't even know it was 2 days, because Cal asked me the other day, and he said, "You in for Sunday?" I said, "What's Sunday?"
Mate, get ready.
Said, yep, we got the after party, we got this, we got that. So we'll be there. Mining store itself will have a big store. We'll have miners. We've got competitions.
Mate, yeah, we're giving away miners, trading stuff. So, mate, if you are interested in coming, reach out to us. It's always a fun day. There's lots going on. There's also lots of freebies, so it makes, you know, worthwhile. And as well, like, these are a very hot ticket item, these tickets, you know, they're $300-$400. So if you're interested, let us know. We're going to draw it out of the hat. And even if you're just
interested in the industry and you want to see other people, but you mainly hang out with us.
You've got to put up with Will doing a speech, me doing, you know, talking to your ear off. So it's a good fun, I promise.
Yeah. It is. I'll mention this again in next week's podcast and the one after, and I think we might have one after that before Thingo, and I'll mention it at the start. But thank you, everyone, for listening today. Awesome. Look forward to next week's.
Thanks, guys. Enjoy.